Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward to what might happen in the next week, and hopefully some ideas and opportunities for you throughout the show. Well, this week was a slow week in the stock market, pre-holiday week. Other markets, commodity markets, had some pretty good moves in them. Everybody waiting for the employment numbers, which came out on Friday. Really, the stock market, a downward chop throughout the week until Friday when it got a lift. But even the move up on Friday didn't get a lot of follow-through. Buyers overall, the stock market, small change really on the week. TV analysts trying to put a positive spin, as they seem to always do, on the employment report. 151 jobs created. The unemployment rate, U3, the headline number, still at 4.9%. But all of this after 8 years of 0% interest rates. This is the type of recovery that we have with only somewhat over a 1% growth rate. There's some anticipation the growth rate could move up to over 3%, but I sure don't believe that's happening in here. We have this massive buildup of debt. We've got businesses really scared by the likes of a government that seems to be controlling all pricing and pushing people into part-time work, especially with the penalties of Obamacare. So this economy not in great shape. 151,000 jobs created is nothing. The numbers should be well over 300,000, and our growth rate at never really achieving any really big number throughout this 8%. 8-year period really shows you that this government influence is not helping, and we need to get them out of the way. Of course, Hillary Clinton, Donald Trump, neither of them will take the proper approach based on what we see. Hillary will probably keep us exactly as we are, and Donald won't even touch the entitlements, as he says. So that being the case, how can we do anything but have a massive amount of debt buildup from here on in? And that's going to continue to be an issue for the markets. There'll be periods like we've had here where it seems like the market's always in good shape, right? Every single downtick, buyers come in. But I'll tell you, there is some tough times out there ahead. And I'm sure that sometime even in this year and in 2017, we're going to see some big volatility in the stock market. Bond market this week moved basically to the downside. The FOMC jawboning about the increase in interest rates that's coming has been leaning on them. The Fed is trying to get back some credibility here, and that has got the bond market on the soft side. Those of you that are our subscribers know that we think there's a change coming relatively soon in the bond market. Dollar got a small boost in here for the week, nothing all that exciting, and the boost in the dollar, of course, weighed on the precious metals markets. Gold had a small down week, nothing really significant. Silver, though, had a great Friday, and again, we've got some happy subs in there because our subscribers were told that we thought we were going to get a good boost in there. As a matter of fact, Friday we saw a silver up over 40 cents at one point, so big gain in silver on Friday, and glad to see that. Oil plunged 4 straight days early on in the week. Friday gave it somewhat of a bounce, but still down about 8% in the week. That's after a $10 6-day bulge that we saw in there that we think was some massive short covering. We had anticipated that oil would again get a move above The $50 number, that is getting a little bit now tougher as we see this. We'll look at that in our short-term view, and we think it's going to have to do some more work before it can hope to get back up into the $50 range. The biggest issue for the oil market is that, besides the fact that inventories keep showing a bulge where they should be showing a decline, the gasoline inventories are really high, and the gasoline chart has just almost completely broken down, and with big supply of gasoline, and demand may be falling off, especially in China. A lot of talk about that. It's going to be hard, for oil to get a big boost in there that it can really hold. So we're thinking there is a rally coming in oil, but maybe not as far as we originally thought. Let's take a look at our 60-minute chart, where you can see what actually happened during this week we're going to call it just another slow, choppy week. Here is that 60-minute chart of the ES, the S&P 500. And you will note in here that we have a gray area for those of you that are seeing this for the first time, and that's the overnight trading. And the white area is the trading during the day. So what happened here on Monday? Well, you could see not much overnight, but then it got a big boost over here and a strong day, but the lowest volume day of the year in there, weaker oil didn't really get in the way of that kind of a move on Monday. Come Tuesday, stocks were down. Fed Vice Chair Fisher again coming out with hawkish talk. Maybe the big effect on the downside was Apple. They now have to pay $14.5 billion back to Ireland, as the EU doesn't like the tax deal that they made, and their home prices were up 5.1% year over year. That is slowing, and Iran came out and said that they're favorable to the oil production freeze. I say no way to that, and they're going to want to continue to build up their level of production, so that's still going to weigh, I think, on the oil market. And that's the day that Abercrombie was down 20% on earnings. I will show you that chart in just a couple of minutes. Wednesday, stocks down again. What I think really happened in here is that oil moved to the downside as the API showed inventories up again. The ADP private sector job number came out fairly good at 177. We'll call it in line. Stock market has got this habit now of moving to the downside and buyers coming in, moving to the downside and buyers coming in, just as apparently happened on all three of the days. You could see Tuesday doing that also, and what really affected on Thursday on the markets was the ISM. It showed a contraction, came in under 50, and that, could be saying that there is a potential recession out there. That hit the stock market, but then the stock market rallied. You could see right in here, some news came out there, really from Apple. Apple went from down to up on the day. A couple of news items. First of all, Samsung's, their iPhone 7 has got exploding batteries. That isn't good, right? That's going to cost them some $9 billion to do that recall, so that helped Apple because, well, their batteries aren't exploding. And then came some news that Apple, Tim Cook came out and said that they're going to repatriate some money to the United States in 2017. Of course, the hope would be that the money would then find its way to investors. Well, it actually did, right? Because the stock got an uptick. So Apple coming up, we think, really did help the market come back. As a matter of fact, the NASDAQ went from pretty good down to up on the day in that rally right over there. Friday, everybody was waiting for the numbers. There was kind of a relief rally right in here that broke the bond market. As you can see, as those numbers came out, kind of not too hot, not too cold. And just some relief, but then the rally started to falter, and as we are doing this recording with a couple of hours left to go, then you could see that just as happens in here where the market goes down and comes back, it seems like the market can't go up without coming down again. So we have this market that is just simply stuck, and we think that the stuckness is going to end with some weakness. So that's a look at the chart. As far as the calendar goes for the week, well, I'll tell you, there's not much in here. As a matter of fact, of my 325 stocks that we look at, the most widely held stocks, Marvel is the only one Tuesday before the opening, and there is literally not a lot of news coming out. Nothing that likely is going to move the market. The beige book may be on Wednesday, could be a little bit of a market mover for the bond market, and of course on Monday we are closed for the holiday. So not really a lot going on there as far as earnings or economic events that are likely to move the market. That's the opening segment for the week. We still have lots coming up for the show, so I will see you just in a couple of moments with the best stocks and the worst stocks for the week. For the best of the week, in somewhat of an oddity, with the grain prices crashing, the best stock was a fertilizer stock. Potash, in merger talks with Agrim, moves up 10%. Mosaic, in the same group, moves up 4% with it. So nice gain in here. You can see on our weekly chart here that these are our colored phasing that we put in here. For rising phases is green and corrective phases is yellow. When you get a breakdown, as you saw here, then that the big declining negative phase is red. So right now we've been in this rising phase, and this news comes out and the stock gets a big pop. You could see it's still relatively cheap to where it was just trading about a year and a half ago. So if this happens, Agrim probably gets a deal. So Potash, the best gainer of the week, up 10%. Cypress, CY, a stock in a hot group. Boy, these semiconductors have been hot. More rumors of a deal in here, and this stock up 10%. You can see in here what we had it projected as, well, starting to roll over right over here. If there's no deal, it probably goes into some correction. But we believe just a brief one in here and then up again. Really like this stock, really like the group. We've been very favorable towards some of the other ones in there, especially Micron. So good looking stock here in Cypress, up 10% also on merger rumors. United Airlines gets a big pop. Man, when United Airlines pops 9% in 1 week, that is really a monster. You can see in here this stock in a nice rising phase right over here and continues to move on the upside. Gets up to some resistance right over here at the major 38.2%. They get a new president who moves over from American Airlines. I guess they think that since he has no non-compete clause, he could just come over and bring all the secrets and get this stock to start growing. Couldn't also get some, must say it had a good week also because of the fact that oil was down so much. So, the group does benefit from lower oil prices, but you can see United Airlines, a very strong move on the week. Take a look at Twitter, TWTR. This stock is a stock that really starting to like. We've seen this base getting built in here that we can see right in here. And for those that are new to our cycle analysis, essentially each cycle points to a bottoming in those important low areas, as you could see, and then the rising zones when they're short and they break down, well, you get into declining phases, and then when you get these nice long positive phases, well, you can see that the upward momentum, it's tough to stop. Right now the upward momentum is tough to stop, and I think that, let's just switch over to the daily chart in here, and you'll be able to see that it looks to us like you got to be buying dips in here, because I think that these patterns in here are speaking bullishly. So what we had was an island up here a few weeks ago as the stock broke down, but now really what's going on here is a model change for this stock. So I said, in order for Twitter to really get going again, they're going to need to do something really different. They are actually. I, as a video producer, this really caught my ear. They are starting a program of revenue sharing for video content. In other words, you get 70% of the ad revenue for the producer, and that's going to bring, I think, a lot of business over to Twitter. And now they're starting to get some rumors in there of takeover. I think the stock is a screaming buy around $19. It's trading 19 and a half, and I think that it's going to be hard to get it to go down. A lot of much more favorable sentiment now in this stock. So that's a look you could see at that Twitter, and came down to that support zone as our members get on these charts, and then started to bounce up again. Resistance up in that 2021 area, and I think it's going to get up there easily. So we want to buy it. You can see the slim ribbon in here starting to turn positive right in here, and that says to us momentum turning up. It happened a little bit early. We were looking for it right over here, and we like Twitter in here. Good stock, up 7% on the week. LVS, Las Vegas Sands, this one gets a pop also. You can see in here on this daily chart, moves up pretty strongly. Let's take a look though at the weekly. It gets up to this important 61.8% resistance in there and starts to stall. The news in here is Macau, their gaming revenues better for the first time after a 26-month losing streak, and Las Vegas numbers were up about 16%. Wynn also a winner on the week. Wynn is a worse pattern, so not loving that one at all compared to this chart, which we would say better, but still at a resistance and likely to get some correction. One more chart we're going to look at in the best of the week with not a lot of stuff in here is Alibaba, BABA. Note that it is in a rally phase, but getting up to what we called 100% extension. On July 1st, which was, well, right around here, is when we added this to a list of best stocks for the year and for our revision. So for the second half, we like this. Stock moves up from really 80 to 100 and hits our target of the 100% extension. So this one really a great looking chart, though I think in this 100 to 105, 106 area, it stalls, rolls over, and maybe you get a little better buying opportunity in there. But as you can see, Alibaba, powerful move to the upside. It's a stock we did turn positive on, and I'm happy to say that our members probably did well on that. All right, that's it for the best of the week, and I'll be right back with the worst. For the worst stocks of the week, everybody seems to be all excited, about 151 jobs created. But you got to wonder, where's the money going, right? People don't have any to spend. This retail category has really been struggling, and it just doesn't seem to be able to get any better. You get a week or so where some of them try to tick up again, but then they start to move on the downside again, especially these teen retailers. Biggest loser of the week, Abercrombie, just a slaughter of 24% in here. Take a look at a pattern that has been bad and has just gotten worse and worse. Take a look here at this, what we call a cyclical breakdown. I mean, this almost got underneath that low. It didn't quite so. You see, this is the rally that ended, and this is the time period, we have it marked off, of decline. We think the stock is much lower over the course of the rest of this year. That's really the way it sets up. Note it couldn't get up to this 34-week moving average and then rolled over. Really a very, very bad pattern, and the stock looks to us like it is a sell. Also in this retail category, other stocks that have had sales issues, sales being weak, Gap Stores is another one. That's down about 8%. The Abercrombie earnings miss. It's the second quarter in a row, and their sales really missed by a lot. In the retail category, you had had Dillard's down 5%, Decker's down 5%, Macy's down 4%. Dick's is holding in there. We still think it's going to get some downgrades and big gaps on the downside because the Olympics is over. So that's one we're short, waiting for it to move to the downside. One more stock in this retail category really worth looking at is Under Armour, UA. This stock takes a hit this week also, as they're down 8%. And analysts have downgraded this stock. I think it's really a proper downgrade in here as we're turning lower. What does this pattern look like in here? Well, you can see the rising phase in here and then the decline, the phase where it rolls over. If you look at the smaller patterns, you can see this right in here. So this is what we're looking at, something like this and then a rally and then something like this. Based on these patterns, we think Under Armour has got some significant downside ahead of it and would not be buying these dips. Here is a first area of support in here coming down into this, we'll call it 35.5, 36, 37 area. Really, we expect that to be pretty easy for it to get down to that level, and then after that moving just minor bounces and then more to the downside. So Under Armour, just a stock that has continued to look bad, and I think this whole group is going to continue to have trouble. Tesla is a stock that was down 8% on the week. Solar City down 13% on the week. Lots of news for Tesla. It was not really a good week for Elon Musk when you look at what's going on in here. First of all, the unfortunate explosion of SpaceX that was a day before it was going to lift up a Facebook satellite, and so that hurt pretty badly. But then you add in the news that there was some mispricing in the Solar City deal, and that could be more expensive, and Tesla and Solar City both in somewhat of a cash crunch. That's what the report is, and man, this pattern is turning south in Tesla. All those 300,000 orders they have on the new model that's coming out, that certainly isn't enough to solve all these cash issues with building this mega battery factory that they're building. So take a look here at this Tesla pattern. This is not pretty at all. And again, we're going to look at the cyclical rhythms in here. These are rhythms in the market that we see of cash flow. Essentially, you're getting a visual depiction of money in and money out, and you could see here money out, right? So here's the rally phase as it was supposed to come, and then turning down right in here. You can see this. Another few weeks, then probably an attempted rally right here, and then down again. You've got to hate this pattern. I certainly do, and I think that when you see this type of action in here, let's switch over to the daily chart, where it's already in this declining phase right over here. You got to sell rallies in here. I do think that there is a lot of trouble here in Tesla. See this low that's predicted right over here? That's today, so you probably get a bounce after today or tomorrow, early part of the week. Then I think that bounce is a sale, as this is a bad looking chart. Let's switch back over to the weekly. We'll switch from Tesla to Diamond Offshore DO. This stock was down on the week. Note it's in the red zone. Petrobras has terminated a contract with them, and that hurts. And you could see, so here's what happened here. This is a rally phase. So that's that green zone right there. Once it breaks underneath there, it turns all of this into a red zone all the way out here till late October. And you can see what's happened in here. I mean, tons of risk. When you look at the slim ribbon on the daily chart, you can see that what happened was it turned to negative momentum as it broke down under this level. Note the head and shoulders in here that formed on the daily chart, and then broke down under that level. The slim ribbon turns negative. The negative momentum drives it to the downside, and then just happens that the bad news comes out after there and drives it down. So a lot of volume capitulation. Maybe you get a bounce in Diamond Offshore, but that is a bad looking chart. Other stocks, of course, in the news here have been Mylan, MYL. Of course, that's that EpiPen news that's come out with the EpiPen prices in just a matter of years going from $100 all the way up to over $600. Now, really a lot of pressure that they're taking. Man, you could say that the government's pointing at them and saying that you've been charging way too much for this particular medicine. Truth is that this is just the free market taking care of itself, as Mylan now has had to talk about reducing the price through a generic, cutting the price in half, and I assure you the prices are going to go lower than that, and Mylan has taken a hit for it. So down another 6% on the week. MYL is the stock we're going to put up here, and you will see that we believe it's in a bottoming process right now. Where do we see that? Well, take a look at the clarity in the cyclical action. This is the cycle brackets right in here. You can see that. Note the rising phase and then the declining phase. The low just about on time. The same thing here, the low on time, and look right over here. That's where the low is due. We actually think Mylan, at least for the short term for a bounce, is in a buy area. Nothing wrong with that. 6% down on the worst of the week, and we think this may be one of the better opportunities as a buy. Mylan, MYL. Last one we're going to look at is Salesforce, CRM. Their earnings came out, they beat, but their outlook was really weak. This is a horrible chart. So not only is this the worst of the week, but it's probably the worst chart of the week that we're going to show you, because this is a breakdown right under here, a cyclical breakdown, getting under the 34-week moving average, getting under that last cycle low. The next cycle low is due in November, so all of this period of time, as we have marked for our subscribers, is a declining phase. If we had colored phasing in here, this would be a big red phase, and you would expect it to, well, get at least halfway down between this level here of 52 and this level here at 84. So that's 16 points off this high, brings it down to about $67, way down over here where we've got this targeted. And I would say this stock is a stock that is in trouble. They say their outlook is weak. I believe them. The chart has a breakdown, and I think CRM is a sell. That's the worst of the week. And I'll be right back with some special stuff in the short-term view. You just saw all of our great services here at askSlim.com. We really work hard to raise your odds of success. If you would like to give us a try, for people that haven't been one of our members in the past, we've got a special for you. You can get all of our rankings on the top 81 stocks, futures, and ETFs. You can get our daily trade setups and access to all 8 categories of our videos. Half price for 1 month. You want to get that? I can send you a special link. All you have to do is contact me through our website or write me at askSlim@askSlim.com, and I'll send you that special link. All right, so our short-term view for the coming week. Here we are in the holiday week. It's been slow this week, and of course we'll be closed on Monday, so we're looking at the next 4 days or so, and maybe even into the second week out there. Every week taking accountability of how we did it in the previous week, and we've come out of the clouds this week, where we were up at about 90% accuracy for a number of weeks in a row. We're down about the 65 to 70% accuracy level, and we call that acceptable. So we're going to look at light crude, the gold market, the euro currency, the bond market, the stock market. So here we'll take a look here at what we said in the last week and what we think is going to come in the next week. Here is the light crude. Now, for those of you that are new, we have a lot of information on our charts, and our chart subscribers who have TOS get all of our information on all 400 symbols. So these lines in here are reflective of the intermediate pattern. We happen to have that on this chart, and the intermediate pattern is rising. You can see that right in here. Now it's come down to the support level right over here in light crude. We anticipated this early failure because this was so extreme and that it would continue to come down. You'll note that there's a rhythm right in here, 7 days, 9 days right there. You see that? And this so far is 6 days to that low. So what we're looking for is kind of a little pullback, another day potentially in here, and then moving up again. We're only going to take half credit for this because we saw the support at around the 46 number, and it got down, as you can see, under 44. We had direction and pattern correct. It got down to a lower level of support than we thought it would. That actually, we had talked about it getting back up to the 50 level over here. Now we have to deal with this, and that is that this next rising phase, it's got to get through this resistance zone. We're going to call for a rally, an up week, and that after maybe a little dip in here, moves up, tests the minor resistance level. 45.50 to 46.70 is where that comes into. And we don't think it's going to get through on this first blast, and the reason for that is because of these inventories and the issue that we're seeing in gasoline that essentially has a breakdown already. So don't like the way the products are acting, and that has us believing that there is still some struggle to go on here for light crude. Next thing we're going to look at is the gold market. We'll switch over to /GC. We have this set to a 2-year chart, so we have proper alignments, and then we come back in. Let's just come back in a little bit closer. So what we had said was that we thought a range was forming that was lower, that was still downside risk, and we saw these cycles pushing down, which we thought would keep weighing on the gold market and the precious metals market. Silver a little out of sync, so we thought silver was going to do better. We were really right on that. So, we thought that 1314 to 1348 would be the range. The range was about $9 lower, still trading in that range that we expected as it gets down into support. So we're pretty accurate on there. Now, what we're looking for in here is you can see these cycles pushing down here for another number of days. This probably lasts through late next week. So we still think we're going to see a sloppy down market in gold that won't stay down, won't get down very far, and then move up again. We're going to call small change on the week and a narrowing range as the downward pressure remains of around 1300 to 1335. So we're going to call it a small week, small change, still with somewhat of a potential downward bias in there, but then really getting ready to move into what could be another lift, but not the big lift. The big lift is still some weeks away, but we kind of think like this, and then getting back up there, playing around a little more, and then getting a lift out over here. But that's some weeks out there, so we're just going to call this small change, 1300, 1335 as the potential range. /6E is where we're going to go right now, the euro currency. And what we're looking at in here, we got this wrong last week. We really expected that it would be an up week as the Dollar we thought would start to edge lower. The dollar still remained on the firm side, though not excessively. This big down week right over here is really, what set the tone last Friday, and it was kind of an unchanged week that you could see right in here. So we probably giving ourselves too much of a dinger in here. What we see in here is both the dollar and the euro consolidating. So we're expecting really narrow range week in here also coming up, and we're looking at the support area around 1130 and the resistance area around 111.30, 112.30 is what we're looking at. So 112.30 is right around that 89-day moving average right in here. 111.30 is right around the 618. So since we see both the dollar and the euro consolidating, we kind of expect a kind of narrow range choppy time in here. I think you could sell premium outside of here in this particular case, because I don't think that they're really going very well. The euro, the way this sets up really is that the euro currency probably doesn't get a lift out here until somewhere more like late September. That's when this period in here ends, and that's when we think that it will have a better time. So we're just going to call it narrow choppy week. Not a lot in there to report, and the only way we make a mistake in that is if it breaks out of that range, which we think it's a small likelihood. Just a 1 penny range is what we're looking for there. So the bond market last week, we expected that it would be in a narrow range, but it would be likely to take out support, if anything, that it would be in somewhat of a downward bias. The roll changed the numbers because we had the roll in there a bit, but man, calling for a narrow range, I mean, that was really spot on. There was nothing in there. It didn't really take out the support. It didn't take out the resistance. It just really is stuck in there. So what are we looking at this week? Now, we're coming to an important juncture in the analysis on the bond market. We had anticipated that this was going to be a period where it was potentially weak, and it has not been able to really make a move. All of this noise coming out of the Fed about them raising interest rates has got them really kind of selling bonds, or at least not letting it go anywhere. However, the data is really not coming out very good. This job number not great. The rest of the data that we've seen has been on the weak side. We have the ISM coming out below 50. We kind of think you got another week in here potentially. We're going to call this, small down to sideways in here. And then sometime near the end of the week or the beginning of the next week, we're entering into a period like this. So the risk is really going to come to the upside in here, and we think that there's a potential for a big rally in there. So we're going to call this week in here, just chopping around, maybe small down for just a number of days, maybe till the end of the week, and then after that, probably moving to the plus side. So that is a look at the bond market. So the stock market has hung in there, right? I mean, it's really been trading in a range for quite a number of time. In fact, really one of the narrowest ranges for a monthly pattern in some number of years. And that could represent a pretty big, important stalling pattern on the monthly charts, and could be setting up some downward action in here. We've thought that that's about to happen. The market really has not given up a lot of ground, and as I showed you, every time some sellers come in, we get buyers that come in back because nobody's convinced that the market could go down on an election year. If you take us up on our special, you can watch the video that I did in big picture analysis for the stock market, which talks about a recurring pattern that says there is risk in this last quarter here for the stock market in this election year. You're going to probably want to watch that. So here we are at the stock market holding together, but I think a lot of risk, and I think risk is mounting in this next several weeks. We'll take a look here at the daily chart in the S&P 500. So what we said last week was that, well, we thought it would go down a day or two, start to rally, but then rallies would fail. We thought it would get down to 2146 in the S&P 500. It got down to 2156. It didn't get down quite as low as we thought. We thought it would essentially really fail kind of quickly. So it was actually down 3 days, tried to rally, and you could see that the rally didn't get anywhere. We think that this, you see that high risk period we have marked off in here? We think it's a high risk period. We could get a little more choppy action in here, but basically the direction should be down. If we get above that high right over there and break out, you'll know that, man, I'm completely wrong about all of these counts, and we're going to have to look hard at it again. But right now, everything points to this period of high risk. We talked about that on Future Speak on Wednesday, that we're entering this period on the weekly or intermediate chart of a likely decline. And we could be building a short-term head and shoulders that you see right in here. That's what it's looking like to me. And if I'm right, that's going to give you a pretty good downside measurement in there. So as you could see here on Friday, tried to rally, the rally didn't hold, and I think we're in this period of risk. We're going to look for 1956 to break and then be in trouble for the next several weeks on the downside. The way that would shape up to us would be something like this, continue down in here for the next week or so, try to get a rally, and then accelerating big on the downside after that, following these patterns with 1, 2, and 3 patterns pushing down there into the late September or October period. Again, we're going to reiterate this is a period of high risk. We get over 2193 on the S&P 500, and it's going to cause us to look really hard at this analysis. And at this point, I would say there's nothing there that says that there's any risk of a big upside move. There is risk of a big downside move. Don't forget, take advantage of our special right now for first-time members. Get all of this great information, our rankings, and our setups on every day on the 81 best traded symbols, and also all of our 8 segments of videos, half price. I'll send you the link. Just let me know. I hope you have a great holiday weekend, and that of course you remain safe in your travels and safe in all of the fun you're having, because it is a crazy world out there. I hope you have a very successful period of analysis as you take all of this stuff that I've brought during the week and take a hard look at it and see how your stuff matches up with what I do. That's it, and we are always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show.